Hey traders, John Howell here. So today, in today's coaching video for you, what we're going to be covering is the stock market update and why I believe actually the stock market right now is creating like a bit of a slingshot pattern. And I'm going to share that with you on the charts and why I see that coming. I'm also going to talk to you about the gold false breakout and why there's probably a big drop still to come out of gold. Not a complete crash or a downtrend, but just a nice balancing out of how these markets operate, okay? Also, the oil crash, I still see a really big drop coming in oil, and I'm getting a lot of people really not really understanding how these markets operate, and they're getting way too confused and too emotional about the short-term movement, and therefore the long-term movement comes and smacks them on the backside big time. I'm going to talk to you about here. Here's one thing here. Right? I'm going to talk about how Tesla looks strong, but another car company, that should say car company, there you go, another car company set up for a big drop. So while Tesla's looking strong, another car company looks like it's about to go through a really big drop on the downside. So that should say car. And also, I'm going to talk to you about why whenever you're analyzing any market out there, you'll see how I'm utilizing any of these charts, stock market, oil, Tesla, this other car company, while utilizing just a simple weekly chart and a 24 moving average can give you some really good clarity around what's happening on the big picture there. So the short-term picture cannot really sort of get you unstuck there. I'm going to talk to you about those damn seagulls in today's video as well too. It's a bit of a story that happened to me just recently, and I think it relates to why I believe most people don't do well at trading. And it actually just and how you can actually start to adapt the mindset to doing really well out of trading. And then also what I do is I want to add on a bit of a training at the end of this that I did a while ago, and I'm going to add it to the end of this coaching video for you today. And that training is all about a step-by-step guidance of the exact pattern, system, strategy to finding a high quality setup in the markets so you can start to really take advantage of that can actually make a big move. So let's get straight into it, guys. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, so let's actually get into the actual stock market now. We'll start off with the good old stock market. So let's start off with the good old S&P 500. And the one big thing you'll be able to see here, right? Look at this here. So this, obviously PowerPoint at the start. I talked about how see this number one here, right? Weekly chart plus powerful 20, that should say 24 MA, all right? But 24 is just simple moving average. Look at this here. One thing I'm always trying to do is to keep it really simple. One thing I do know about how these markets operate on a fundamental level, so I can really understand what's going on, is this. You'll notice that if I can just bring up a weekly chart here with nothing on there apart from one moving average, you'll notice one thing here, right? And this allows me to make sure that if I'm getting into the market, I'm not getting into the market at the wrong time, right? The whole trend is your friend until the end, right? But you could be getting into the trade. You could be getting into a trade when the trend is when it's at the yes, you're getting in with the trend, but you're getting in at the wrong time. And what I mean by that is that as a lot of amateurs don't know is that when the market goes up for a while through here, they're starting after a period of time they're going up. Now they think they're going to miss out. And then what ends up happening, right? The market starts to do this on them, like through there, like that, right? And then guess what? Then they get out, they freak out because they're like, oh my goodness, now the market gets out, and then guess what happens? Then we go for another big move to the upside, don't we? Right? This is obviously trend analysis because I think a lot of people, and maybe yourself here, because a lot of people don't understand fundamentally of how the markets work. They're getting in at the wrong time. They may be getting in with the trend, but they're getting in at the wrong time on the trend, right? This is why I always say, if you want a simple line, trade with the trend and wait for some form of a pullback first. That way you're probably getting in on at least the next leg up. So trade with the trend and wait for the pullback first, then get in. Don't get in after what? After it's already done something like this through here, right? So bam, bam, bam. Because guess what? As you know, if you look at this mark, if you just look at the chart, how does the chart work behind the scenes, right? We go up, we're down, up, down, up. See how we just see that through there, right? So as you know, if the market's going up through here and you're trying to enter, you probably enter, so on and so forth, right? So the big thing about what I just said there is that whenever I'm looking at any market from here, I'm bringing up the simple charts. Okay, cool. What's the trend? Are we making higher lows? Yes, we are. What's the moving average doing? The moving average is trending up. Okay, cool. The trend is to the upside. Now, where are we right now? Are we pretty far away from the moving average? If so, well then we probably would expect some form. If we're too far away, you get the point, right? Even on the downside. Whenever we get too far away, we end up getting what? A bit of a pullback. So if I'm looking to get in now, it may not be a good idea to be getting into a trade right now. Why? Because we're probably going to go through a bit of a pullback first to get towards the moving average first. As you can see, right? We end up going through these pullbacks in the markets. And this is where a lot of people get unstuck. So for me personally, just by looking at this chart here, I would expect to see possibly another bit of a short-term weakness in the markets. This is the weekly chart. Now we go to the daily charts and now we can see, oh, look where we are, right? So that weekly chart through there could quite possibly, maybe even go through, we could quite possibly see just probably just a little bit more downside that come out of this level through here, maybe through there, all right? We have this low, higher low, and all this is as you can see, right? As you can see, these lows, higher lows, all this is just a nice healthy correction before we see some more movement to the upside, right? So that's, again, this is what I'm doing through. And I'm gonna apply the exact same analysis towards all the indices, right? And all the markets out there, because it's the exact same analysis, because fundamentally, if you understand how markets truly operate with what I just said there, you can really simplify your trading strategy and get into some really good trades. It doesn't have to be that complicated, right? As you can see, what am I doing here? I'm just looking out at the market with just really one moving average. And because I'm getting in based off how markets work, I'm not looking at indicators. Indicators confuse the hell out of you anyway, right? I'm pretty sure you know yourself, right? You're using all these indicators, VWAP and stochastics and MACDs and and Elliott waves, and before you know it, you're confused. You don't even know what to do, right? So the same thing. This is some advanced techniques I was utilizing with my actual. This is some drawings I was doing with my private clients. I won't get into this here, but bit of an advanced technique when you're actually reading the actual chart itself, and how this technique up here is probably saying that we're probably likely to get a movement on the downside. But I don't want this video to go like 4 hours for you guys. So that's obviously what obviously for my private clients, and I'm with my private clients every day. If you're interested in joining that, guys, I've opened up some spots for a 12-month coaching program with me. There's a link in the description there. You can apply for that. But let's have a look at this here. So if I'm looking at the Nasdaq is actually at the bit of a resistance through here, right? This is where, remember I said before, guys, right? Weekly charts, what the weekly charts? Weekly chart is at the resistance, bit of a double top. So not a change in trend, right? But what we can see is, because we're at the bit of a double top right now, low, high, low here, we may have a little bit more downside to come. And if I'm looking at, say, some Fibonacci levels from there to there, right, where it may get down to, we may start to look at maybe somewhere down through here. And as you can see, that's the moving average coming up through there. So we may get a little bit more short term on the downside. But why I said this level here is why I said a potential slingshot coming is because if we go to these charts here, I do see that just by looking at this Nasdaq chart, even the S&P 500 chart, right? I do see that this movement on the downside is probably going to be short-lived before we see another slingshot back to the upside. If we go back to the Dow Jones, and the same thing for the Dow Jones, right? Dow Jones had a very big move to the upside, and this is something that I see a lot of traders making the mistake when it comes to their own personal trading, and something that I did for a long time I didn't understand is, if I was looking at the daily charts, all right, these are the daily charts here, and I'm looking to see, okay, should I get in today? Should I get out today? I didn't really understand the concept of understanding the big picture first. And this is something that I teach. One thing I'm really big with my clients anyway is that I teach them a foundational simple strategy, which, by the way, I'm going to teach you at the end of this coaching video. But then I teach them a level 2 strategy, is how to trade multiple time frames for powerful setups. And understanding the multiple time frames is one of the most powerful things you can do. Meaning, like, what I'm teaching, and what I'm talking about here is what I'm teaching you guys right now, right? How to utilize the weekly charts, the trend analysis, the momentum. Are we too far away? And then combine that with the daily charts with some really awesome entry signals. You can do really, 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 really well, right? But once again, just same thing with the Dow Jones, right? What is this? We're making these higher lows, so the trend is up. We've had a big move up, and we're just got a bit too far away from the moving average. So there's probably two things that's going to happen here. One, the moving average is probably going to continue up like that. So we may even get another weakness coming down through here and then a continue up, or we may just go sideways for a few weeks and then we make our way back up, right? So that's what I'm seeing through there. And then on through to King Russell. King Russell is what I see happening in the market. Oh, futures markets have just opened as of doing this video, and we're getting ready to have a move. This, to me, I see King Russell. King Russell right now was, again, short term, really flat through here. But if I look at this from a big perspective, like here, look at this here, right? So short term, look at this here. That's short term, but look at long term is what? Moving average to the upside, and we're doing these high lows still. So even if we do have a move down through to here, it's probably going to be another higher low, and away we go. I do see the Russell. I always say King Russell. And the reason why I say King Russell is because once we do start to go through that slingshot pattern with the indices, I believe the Russell is going to be the one that's going to start to outdo all the other indices, and I believe it's going to start to play catch up in the markets from there. So that's what I'm looking at from there to there. Let's go check out this level here. So I also promised you about gold false breakout and the big drop to come. So let's go look at the gold here, and the gold false breakout is. Oh, by the way. See what I'm saying here, guys? Once you understand these markets, if you go to the weekly chart and apply the exact same analysis, what's the trend? Higher lows, moving average. Okay, moving average. So the trend is up, yes, but are we too far away from the moving average? Look how far away we get from the moving average before what? Before we end up getting a movement towards it. So right now, as you can see, this is the reason why for the last few weeks, I can never get the exact top. No one knows the exact, this is the exact day the top's going to be. No, but we can get ourselves ready for the next few weeks that it may start, it's probably going to form a top soon. Why? Because we're just too far away from it, right? Look at this here. Look how far away we are. So we're probably, this moving average, we're going to either go sideways or we're probably going to get a drop down to come back towards a moving average, right? Because that's just how the markets work. So it's not about trying to get the exact top right now, but it's about saying, okay, let me get ready for let me get ready, because there's a real high quality chance that over the next few weeks we're going to start to see that pullback. And when that pullback does happen, guess what? You're not freaked out. You're not worried. You're not concerned. Why? Because you saw this coming. And why most people don't see this coming, because they're focusing so much on all this other stuff, and they're focusing just, gold 10,000 or whatever. Because you're really alert about what's probably likely to come real soon. Once it does start to take place, we start to get a pullback for a few weeks, maybe a month or more, right? Because these here, by the way, this is a weekly chart. So this here was around about 3 to 4 months. This here was about 2 to 3 months. So we're probably going to get a 2 to 3 month pullback out of this level when it comes to the gold market. But when looking at the slingshot move, right? The false breakout. The false breakout is what? This here is the false breakout pattern on gold. Look at this here. So that was that level through there. Look at this here. Straight up and straight back down. What does that mean? Complete and utter reversal. So what's probably likely going to come now? We're probably going to start to see that movement on the downside, right? So that's what I wanted to share with you through there when it comes to the gold market. Let's go check out this level here. So oil crash. Next thing I promised you was the oil crash in the markets. So one thing I really want you to understand, guys, is that once you understand how all markets operate, you use the same analysis across all markets, right? It's not like this is a Forex trading system or this is a stock trading system. No, if someone tells you that, they don't know what they're doing, right? Because the way that I trade of how markets operate on a universal level. Foreign exchange, futures, commodities, stocks, right? Because why? I'm going to go now do the exact same thing that I told you on gold, on stock market, and now with oil. What is that? Weekly charts, trend analysis, right? It's as simple as that, right? Now look at what we have here. High, and a lower high. And now we're still squeezing up to this level down here. We're still on a downward slope through here. And now guess what we're getting? Look at this moving average. It's now trending down. So we have these lower highs in place, right? And we're trending down through here. So the big thing here is that we may get a little upside movement through here. But if we keep an eye on that big picture, what's probably likely to come real soon? And again, let's actually go back to our weekly charts here. What's probably likely to come is what? Once we start to get a breaking of this 66 level, it's probably going to start to see a bit of a waterworks. And the one thing that I see a lot of people do is like, I'll say that and then it doesn't do much for a week. And people are like, oh, it didn't crash, John. You have no idea what you're talking about. Right? What I'm saying is like, I don't know when it's likely to happen, but there's a high probability of it happening. So when it does start to happen, you're not surprised. You're like, oh, I was actually waiting for this. This is what the charts are telling me. Right? Because you can see from that, again, that weekly chart is what? The weekly chart is a weekly chart, right? That means it's the big picture. That means we could bit of volatility for a week or two, right? Because guess what? Once again, all these are weekly bars. For you monkey brains out there that can't sit still for a day, this bar here represents 5 trading days. This bar here represents another 5 trading days. This bar here represents another 5 trading days. So here, right here, is 15, 20 trading days here. And your monkey brain, of people that are really jumping around, which is, by the way, that's this seagull story. Yeah, that's for you, right? But I'm trying to get what I'm hoping. A lot of people that are jumping around, then they're missing a really big picture here about what's going on here, right? And again, things do take time. If it's likely to break down, we just need to be alert for it. Now, this is one thing that I really have learned for myself is that if we can see something like this and be ready for it, it may take a few weeks to line up, but we could actually get a really good entry signal and benefit from that. Because I remember the same thing with gold, right? For me personally, I traded gold on this breakout here and I got out actually up here. And then I had another really nice trade through here as well too. So I've actually had 2 trades through here. People think I'm full of shit, whatever. I don't really care what you think. I'm just letting you know what I actually did, right? My private clients saw me do this. So, it doesn't matter what you think. I know exactly what by the way, I actually talked about this live on YouTube. So this trade through here. Anyway, the purpose of me saying that is, guess what? This really big move that I was in for 6 weeks, that by the way, generated close to a 400% return on my options, by the way, right? So that means, you have a $10,000 trade would have made you $40,000, close to $40,000. A $20,000 trade would have made you close to $80,000. I'm an Australian. You convert that to Australian. Now you're looking at over $100,000 profit in a matter of 6 weeks by waiting for the right opportunities to get into this. Anyway, that's just me. Anyway, so the purpose of what I'm saying here is that I was seeing this thing set up for a good trade for myself, right? But look at this here. I actually had to wait for about a month. Every single week, I was watching this unfold. And then as soon as we started to get the breakout from here, I was ready to pull the trigger. The purpose of me saying this is that once you can get a good understanding of how to identify a really good quality setup and then be patient and wait for that thing to set up, it can produce a really good opportunity. A lot of people, they're looking for a really good trade today. But I'm always scanning the markets looking for opportunities and then creating watch lists and watching these things unfold because it may take a good couple of weeks for that trade to set up and then I'm getting ready to pull the trigger. And just like gold, again, I traded gold, traded the thing here. And then I also, if I actually show you I actually got in, just show you this here. For me personally, I got in on this breakout bar here and I got out up here. And I didn't get in through here, and then I got in on here, and then I got out up here as well too. So that's the 2 trades I've actually had. Now, trading opportunities, right guys? Trading opportunities. For you guys that are watching, there's a differences from buying, hold, long term, right? If you're buying, hold, long term for 3 or 4 years, you won't be getting in and getting out, right? That's investing. If you're an investor, don't confuse that with the trading mentality. What I'm talking about here is, right, is people that are looking for opportunities to make money this year, right? Not I'm looking to buy and hold so I can potentially sell it in 5 years time frame, right? That's a different mentality across. Do not mix them up, right? Do not take what I do and what I talk about on a chart and a technical analysis and a short-term level, maybe even go, say for example, gold pullback right now. Do not take that as like, well, I should get out of my gold trade right now because it's likely to pull back, and then I'm going to buy in. I'm going to buy in soon. But no. If your plan is to buy and hold for 5 years because you see big things happening in the next 5 years, you buy and hold and you never sell for 5 years. You go through the swings, right? But what I'm talking about here is for people that are looking for opportunities so they can actually generate a good income this year in the markets, right? And which is more like a trading income. You're active, you're looking for approaches here. So they're the two trades I've actually had when it comes to the gold market from there. Anyway, let's continue on here. Weekly chart plus 24 equals power momentum. We've actually sort of been covering that as I've been going along through here. So anyway, let's actually talk about, actually that's that one through there. Actually, now I'm going to go to look at the Tesla. So Tesla's looking strong, but another car company, set up for a big drop, okay? So let's go look at this here. So if we have a look at Tesla, okay? Tesla's actually quite, if we get, again, what am I going to do, guys? I'm going to go to the weekly charts, right? Weekly charts always. What's happening through here, right? So the moving average is what? Starting to trend up, and we're getting low, high, low, and look what happened here. Just developed another high, low, and now it looks like we're starting to, a little rejection through here, but we're starting to get a lot of push to the upside. But what is that other car company? The other car company is Ford. Ford is now looking weak on the downside, right? Now, why am I saying that? Let's use the exact same analysis, guys, across all markets, okay? What is this? We're now high, and now we're developing potentially a lower high through here, okay? We do have a major level of support coming all through here, right? So if Ford does hold here and we start to break below this $9, we're probably likely to see a really big drop to the downside coming out of Ford through here. And we're actually starting to see that right now, right? We're starting to get this high and a lower high through here, and we're starting to get this movement on the downside. So we're not there yet, but maybe over the next course of a few more weeks, we could start to see Ford drop to the downside, and Ford could be getting ready for a movement on the downside from there. So now let's talk about those damn seagull story, and then I'm going to get into the powerful setup. Now the damn seagull story. What ended up happening was, here's a bit of a story for you guys. Okay, what ended up happening was I went to the beach yesterday my time. Okay, I went to the beach. And I went there first thing in the morning, went for a nice walk, did some meditating, stretching, relaxing. And then I bought some breakfast, and then I brought some breakfast food from the cafe, right? So I bought a bacon and egg roll, and I had a juice as well too, right? So I end up getting the juice, and I end up getting the bacon and egg roll, okay? Now then I went and sat down on the grass. There was a grass area there, which also had a bit of a cliff, which was then looking over the beach and so on and so forth. Anyway, so I sat on the grass bit there, as looking at the sand and looking at the beach and so on and so forth. So what ended up happening was, as you guys would probably know, right, by going to the beach and those damn seagulls, right, is that if you get a whole bunch of chips, right, or even just some bread, right, like I did, I had a bacon and egg roll. What happens? Those seagulls, they will hawk the crap out of you, right? And they'll wait for you to open your container, and they're gonna swoop straight in. They're gonna peck your head, peck the box, peck it all, right? You know that, right? So I knew this, and I'm sitting there. Okay, so I'm sitting there, and I'm just like, man, these seagulls are around me right now, and they're looking at me right now. They're waiting for me to open up my box so I can take my first bite of my bacon egg roll, right? And then what happened? And so then I sat there, and I'm looking left and looking right, looking to my left, and they don't have any bread or anything like that. I think I've got some muesli. To the right of me, there's some other people that maybe they've got some bread, so they're going to attack them as well too. But they're also watching me. So what did I do is that I sat there, right? I sat there and I kept my box closed. And I sat there like nothing was happening, right? And I looked left, looked right, looked around, see where the seagulls are. Okay, seagulls are still around me. Let me just sit here and be a bit more patient. But let me keep scanning to see where the seagulls are, right? So I sat there maybe for a few minutes, maybe even for 5 minutes, and watched the seagulls. And maybe the seagulls, they found another place to go get the chips, so they would fly over, maybe 100 meters over the other side, and because there's someone feeding them or whatever. And as soon as that happens, guess what? I open up the box and I quickly take a really big bite, and I shut the box, and then I sit there for a few minutes, chewing away at the bite that I had, and then I'd swallow it, right? And then I'd sit there and I'd wait and I'd scan and I'd patiently wait and wait and wait. And I keep scanning around to look around me to see where the seagulls are. And guess what? Same thing, right? A few minutes later, coast is clear, scanning. Okay, open up the box, take a really big bite, shut the box, right? And then chew away for a few minutes as I was chewing on that really big bite that I took. Right? And I did this over the course of probably 15, 20 minutes, right? Or maybe even longer, right? Just sat there doing that. And it made me think about, that's how trading really works, right? I think a lot of traders, they get a lot of, and I would say probably 90% of the people who are watching my video right now, you're probably not having a really good year this year. Because you're not operating in the way of those damn seagulls, right? You're operating a way of, I want to take a bite right now. Right? And you take a bite right now, and guess what ends up happening? You get shat on. Right? But if you can operate your trading in a way of those damn seagulls, then guess what? Then those damn seagulls is like, okay, I'm gonna sit here, I'm gonna be patient. I'm gonna scan the markets, I'm gonna be patient. I'm not gonna open up my box right now. I'm gonna scan the markets. I'm gonna be patient. But I'm going to also keep scanning the markets, looking at different stocks, looking at different prices, looking at commodity prices, whatever you trade yourself, right? I'm going to be patient and I'm going to keep scanning. And I'm going to keep scanning for the opening of the right time to get into the markets. I might have to sit there for 5 minutes. Or in the case of the markets, maybe for 3 days and not take a trade. Or maybe for a week or two and not take a trade. But I'm going to patiently sit here. I'm going to wait, and I'm going to wait for the right opportunity so those damn seagulls can leave me alone. And then I'm going to quickly take a really delicious big bite, get that egg yolk running all over my face, get the bacon into me, right? Get the nice sauce into me, yummy, yummy, yummy. And then guess what? You take a really delicious bite, aka you take a really amazing trade, you make a really nice profit, you get out, and you guess what? Then you sit back, then you come back out again, right? And you sit there and you wait, and you take a really good trade. And then now guess what? Now you're patiently waiting, right? Scanning the markets, seeing when the seagulls go away, seeing when the right opportunity to take another bite, and you go back in again. Right? I hope you guys get the point what I'm saying here, right? And this is reminding me so much of actually trading the markets because I sat there being patient, waiting, scanning to see when the seagulls are giving me that opening, and then bam, I take a bite. And that's when I've actually made my best trades in the markets, right? And my best trades, and like for this year, I've had a really, really, really good successful year this year. And it's just become a result of that. Probably at least 70% of my trading this year has been just waiting, being patient, and then getting in, and then not being greedy as well too. So anyway, traders, that's it for this video here. But also, I want to finish this video off now with, as before, with the trading that I did a while ago. But I want to add it onto this video here to help you. And I'm going to talk to you about a very simple but powerful setup that can, man, my spelling is atrocious today, isn't it? Anyway, that can help you make a really big move. Enjoy the training, guys. Hey traders, it's John Howell here. Today, what I want to do is I want to share with you a pretty powerful pattern that you can look out for when you're trading that just works amazingly well. Plus also I'm going to give you a bit of guidance on how to actually cut your losses short and let your wins run. So alrighty traders, let's get straight into this pattern here. Now, let me give you a bit of a background on this pattern here just for a minute, okay? Now there's a lot of the times the market will be just going sideways. It won't be doing much. This is actually a pretty powerful pattern, okay? Look for this pattern because it's just amazing. So a lot of the time, or sometimes you'll see the market, it won't really do much, okay? So what I mean by that is this, okay? So sometimes you'll see the market, it might come back down, it might bounce, it might do something like that, it might come back down, it might just go sideways, right? And then do something like that. You might see a period where the market is just going sideways, not really doing much, okay? So here's the really powerful thing. Sometimes when the market's not doing much, let's say for example, this is a big downward trend, okay? Where really we've been doing this sort of thing. We've been coming down, we've been in a bit of a downward trend, and then suddenly we just started going sideways through here overall. Not really much going on. And then suddenly what happens is we have this level here would be what? That would be major support level, okay? And this is actually a very I love trading setups like this, and if you'd like to learn more about my number one trading setup and how I trade the market and how I scan the markets to find powerful setups just like this, then go to johnsfreetraining.com, JOHNS, johnsfreetraining.com. I've got a free training that goes for about, I don't know, 80 or 90 minutes, and I walk you through everything about my trading system and how I find it and so on and so forth. So go get access to that now. So what happens is this is actually pretty powerful. Firstly, what happens is that the market actually breaks support. Okay, it actually comes back down and it breaks support. We're in a bit of a downward trend, and we go sideways, and not much happens. Now this is where it becomes really, really, really key. Okay, it breaks support, but we don't follow through initially. And what happens? We have a strong move down, but then suddenly we have just this very, what we call small bars, small bars, and it rallies back up towards the resistance line. Watch for this pattern trades. I tell you, if you just trade this pattern alone, you'll crush it in the markets, no matter what market you're looking at. Okay, intraday charts, whatever. Okay, yeehaw, let's go. So you're seeing that, and the market breaks support, and it has little bar, small bar, small bar, small bar, and it's in a downward trend still. Okay, so we're still in this downward trend through here. So we're still in a downward trend, and then the market breaks. But when it breaks support, it actually starts to have all these small little bars coming up. It means the buyers are struggling, and then suddenly out of nowhere, a continuation of the trend, we get a very large bar breaking down like that. Very big, large bar. What does that mean? Here's the thing. Small bars means no one's really in control. We're not getting big dominant buying move. We're not getting big dominant selling move. Okay, so there's what we call no one in control in this market here. Make sense? So if no one's in control in this market here, then what happens is that as soon as we get a big strong dominant bar on the downside, guess what? That means that there's sellers in control. Make sense? And so then we see this here. Okay, we see this here. This tells us right now that there's a massive probability we're going to be heading down like so. Okay, we're going to be heading down like so, like that. There's a massive probability that this is going to be a really successful trade. Now, there's other things you can overlay it, and I'll talk about that a bit later on. Actually, on that free training I'm giving you, I talk about how to take this setup like something like this, and then overlay something else with it to give it a massive probability of making a big move. But I'll just keep it simple right now. This is what you want to see, right? So the first thing is breaking of support, a small little rally up, and then a breaking, okay? And then you want a strong bar breaking down, showing us that we have confirmation that the market is now there's now massive probability we're going to continue down and have a very nice profitable trade out of that. And if I go back and have a look at this chart here, okay? So we're looking at this chart right now, and it doesn't matter what chart this is. It could be any chart, okay? There's two different moving averages on this screen here, and I'll explain the reasons why. I use really three moving averages. You guys have seen it: the 52 moving average, the 20 moving average, and the 9 moving average. Okay, I've just always used those myself. So, but forget the moving averages for a minute. Okay, if I just actually, I'll just forget the moving averages for a minute. But notice what happens here. Okay, notice what happens here. What see happen is, see how the markets come back down, and then suddenly we just started to really go sideways through here. And then really, this actually was as you can see, this is actually a major support level on this particular stock at this particular time. And so we had a major support level, look what happened. And then look what happened. It did what? It broke down, it rallied up, small bars, struggling. And then guess what happened? And then small bars, see how it's still struggling? It's still struggling, and then still struggling. And then bam, let's see if I can get that bar. Can I get that bar like that? Oh. Do any of you guys use TC2000? How I can just go? That's the one thing I don't like about TC2000 is I just can't go to the exact bar. All right, come on. All right, software is actually breaking on me. So as my software is doing its thing. So the big thing here is, oh, there we go. All right, let's go back to the bar now. There we go. Come on, bar one. There we go. All right, let me just go one bar. Where is that bar? Come on. Can I get it? Can I get it? 1, 2, 3, 4. Oh, I'm not going to get it. Okay, cool. So let's actually just do this here. All right, I'll pull this down through here. So here's what it looks like, right? As I said before. So what happens is we got a big downward trend. We have a high, lower high, lower high, lower high. We broke this key level of support. See how we rallied back up with small bars? And then suddenly we break down with a large bar. This here tells us that there's a massive, massive, massive probability, massive, that we are going to generate a really nice profit on this trade here. And look what happened here. The very next bar actually ran down. Now, just use this, guys, right? Use this. This actually happens for the bullish side as well too, right? If you flip it upside down. Actually, let's see if I can do that. If I just, it also looks the same for the bullish side as well too. If I just, let me take a screenshot of this. And then what I'm going to do is I'm going to then just see if I can just, let's see if I can just flip this on its head. There we go, like that, right? So that's exactly what it looked like for a bullish setup. It's the exact same thing. So whenever you look for this, wait for good significant support or resistance, slow, small pullback, and then a very large bar breaking out. It's super, super, super powerful. Now, I did promise you I was going to give you a bit of an extra little tip. And the tip is, if you're trying to scale out, if you're trying to let your profits run and cut your losses short, then use a simple, use a close moving average. It could be whatever moving average, right? I use a 9 moving average. Now, I don't always use this. Okay, some trades don't allow for this. Sometimes I'm only in and out the very next bar. It's what I call the short-term trade. Again, on that training, I'll share with you what I call from a short-term trade, and then from a big profitable trade as well too. But this one here had the makers of being a big profitable trade, so we used the 9 moving average of getting out. And as you can see, look what happened there. It actually went from 20 all the way down to, now this again, guys, this doesn't happen all the time, but there's setups out there that's going to happen again like this. Okay, so you can see, look what happened here. We got a literally a 60% drop in the markets in roughly about a month there, but using the 9 moving average and just staying in and staying in and staying in. So use this, guys, in your trading. I promise you that you're gonna kick butt and you're gonna take names. You're gonna kiss babies. And I promise you, if you just stuck to this one setup alone, you won't get many setups. But come to me in 2 or 3 or 4 or 5 years and tell me you are not absolutely crushing it in the markets. The only thing I do say, traders, is that the hardest thing about trading in general and things like what I'm just talking about here, the number one hardest thing that you're going to have is that you won't get this setup today or tomorrow or next day, or it might be a week without a trade. And then guess what happens? Then you start to take all this other bullshit, which causes you to go backwards. But if you just stuck to, because your whole thing about trading, right? This is one thing that I had to learn about the fundamentals to becoming a good trader. Which was, it wasn't the market that never got me, right? It was always me that got me. And what I mean by that is that I always thought my thinking was getting me. My thinking was, oh, well, I make $400 a week right now washing cars, which I did at the time. Right, when I started trading the markets, I only earned $400 a week washing cars. So I thought, okay, well, I need to earn that to replace my income. So I've got to trade every week to make $400. Otherwise, I'm not going to replace my income. So therefore, having that mentality, guess what? Actually caused me to go backwards, because if there wasn't a trade setup that met the trading rules that I knew had a massive probability of working out, then guess what? Then I would take all this other crap and it would cause me to go backwards. But if I just stood back and just waited for really good quality setups, yeah, there might be maybe 50 months of the year, or maybe 50% of the months of the year I don't have any trades, but 50% of the months I do have trades. I'm just throwing numbers out here. If you trade intraday, you're going to have trades every single month, right? But the thing is that if you take those trades, you're likely to do really, really, really well. And if you're trading things like options, do you realize this trade here with using options, and if you just use this strategy, you'd be up 1,000+%. That's like turning 10 grand into 100 grand, just one trade. You see what I'm saying there, traders? So just one really good trade throughout the entire year can make probably double most people's salaries, in just one really, really good trade. And they do come around. That's why it's being consistent, but also knowing what to look for. So go back and backtest this, guys. I promise you, you're going to rock out with your sock out, and you're going to crush it. Just be patient, wait for these setups, and you're going to have an amazing trading career.